Happy Friday, everyone. I'm going to start with a little bit of fundamental news, just the main points of the Fed move on Wednesday. We have 2 months left till the next one, so 8 weeks. And right now, their hikes have entered a data-driven phase. So what that means is, depending on the data that comes out, another hike may or may not be in sight. This is a great article that I'm going to send over on the general chat for you to read in detail, but I'll just give you the main ideas in case you're just going to listen to me for pointers. So the market got what the market expected, but the market didn't pump. And that is a sign that there was something else in the message that didn't allow the market to be as optimistic as it was before. So that message is, in my opinion, the fact that Jerome Powell was quite reserved in terms of what's going to happen in 2024. And in my opinion, he was long-term hawkish. You can play back his speech and the press conference as well. But basically what he said, he doesn't see inflation coming down in the next year, which makes this a long-term recalibration process. So the market expected the 25 basis point hike, but it didn't expect this as a secondary message. The fact that it might take, he basically pushed it, as far as I understand, up to 2025. He was quite clear that there's no room for relaxation and inflation is still high. He said that if the data flow coming in till September is positive, that might mean another pause. And in this speech, in my opinion, in the press conference, he was quite reserved. He said everything that we already knew, the fact that it is data driven and the fact that the economy is doing reasonably well. But again, what they're trying to achieve in terms of the inflation decreasing down to 2% is not in sight. So basically, they will keep going as long as they have to. Now, this left the markets in a little bit of a contradiction. And I'll show you the dollar and I'll show you the SPX as well. The SPX is an interesting example in case for that, because we had higher highs on the days. So where is it? This one was Tuesday, a higher high, closed here. Then we had Wednesday a sort of a pivot candle, and then yesterday, Thursday, a higher high and then a push down. Now this didn't break the previous low here. So if this is the phase of a peak formation, what I'm looking for to see in the S&P, and I believe that our coins will follow, is a breaking down and then a lift up and then a breaking down and then a lift up. So that would be the path that I would be watching on the daily. So we're going to be talking about the daily time frame now, because the 4 hour and the 1 hour right now are irrelevant, both in terms of percentages and also in terms of trends. So again, we haven't broken this bottom, this neckline of this M formation, so we haven't started correcting down. Once we do that, I'm pretty sure there will be a steep correction, because the S&P has had a lot of bearish divergences on the daily. Could it still keep going? Yes, it could, because it could keep going for as long as it takes for the weekly to reach the top. The weekly hasn't reached the top yet, and you can see in previous bull runs how long it stood there at the top. So that's what we're after if it is to come down. Now, Also for the S&P, the reason why I'm saying this is because I know there are voices in both directions, and there are reasons for both directions, to the downside and to the upside. Personally, I think we're gonna continue to the upside. I don't see any reasons to reverse. And I used to be quite I'll say biased because it's the easiest. It wasn't as strong as bias, but I used to see the downside a lot until I put myself in check and said, listen, you don't have the confirmation. The fact that it's overstretched to the upside doesn't mean that it's going to come down. So we're going to have our confirmation when we break, as I said, when we break this M formation. We push down, we break the 20 here, my orange line, we lift up, we push down, we break the 50 here, the blue line, we lift up, and then we come down for a back test of this level. So this would be again very healthy. It doesn't mean that we are in a bear market or that we've changed the macro trend of the lift, but it does mean that we are looking at a correction. And this would be like, look how beautiful that would be, technically backtesting the 200 on the daily that hasn't been backtested since it was broken. So that would be the trend. Now, in the meantime, could we still continue to the upside and do this later on? Yes, we could. And this is where the bears have been constantly squeezed by higher highs on the daily, minimally. So it is losing. We can see that the lift is losing strength, but it's still going. Okay, now I'm gonna remove this just to make sure it doesn't interfere with my other charts. There we go. And I'm gonna show you the dollar. Here's the dollar holding the support of the 20 on the daily. It is lifting. The stock on the daily is up. It's above the 800. The 800 on the daily is what caught it. It did a double bottom here. Didn't back test it, but here it is holding the 20, meeting the 50. It has been meeting this 50 for a long time since it broke it. And it couldn't turn it into support. It managed to turn it into support here, but then couldn't keep it. Again, I'm looking at the 50 here and the 200 being possible supports. If the DXY lifts, then risk assets are going to come down. So I'm expecting the stock, the S&P to do what I've just showed you, break that M formation and start coming down. Again, for now, the dollar is finally holding. Yesterday, I was waiting for something new to tell you in today's session, because we finally have the support of the 20 MA on the daily for the DXY. It is above the 20. It closed yesterday, and right now we are above it. If we close today above the 20, I do see again, a downtrend being more likely. However, I can't confirm the downtrend until those supports on the dailies are lost for the S&P, and then I'll show you what those supports are for our BTC and ETH. If we're looking at the week has leveled out in stochastic and has multiple bullish divergences here in the regular RSI. It hasn't reached the bottom yet for the dollar, which is a little bit odd, but it has reached the 200 EMA. So this is what's holding it, and this could be a back test, continuation up, do the rally that the coins have done, and for the coins it would be a lower low. Or it could just be a little bit of consolidation, meeting the 50 on the weekly and then pushing down, breaking the 200. And that would be, again, for us continuing to the upside. Overall, in the bigger picture, this is not so... I've noticed lately the DXY hasn't been so accurate for the 4 hour. But on the daily time frame, and not even day by day. The day by day readings haven't been in that exact inverse correlation that I expected to be. But overall, with the trend, it's been quite helpful to chart and have a look at the DXY for direction. Now, let's have a look at what's going to come out today in terms of the news. You know, Friday's session is looking back at the week and mapping out the weekend levels, which is what we're going to do today. We do have the core PC index coming out today, employment cost, US revised consumer sentiment. All of this will bring volatility. It looks like today we're going to have a choppy Friday. Choppy Fridays are great for getting an entry. Usually there are two trades on a choppy Friday, a choppy big range Friday. There's a short and a long, and wherever we close on Friday, we are looking to continue on Monday. This is what happens again 80% of the time, and I'd say more. I'd say 90% of the time. That's what I expect us to do today. So if the coins are going to close on a lift, we're probably going to continue lifting on Monday. We still need to confirm those levels of support for a bigger daily lift. But that's it. That's the point that I was going to make. Fridays are great. You can trade them on the 15-minute. I stopped doing that because it's quite intense. And again, it's your choice whether or not to take trades on the 15-minute. So yeah, that would be the plan for me, as I'm looking for a 4-hour entry in both ETH and XRP at the moment along, but I am gonna check to see how today will behave, and I'll keep you posted, of course, in the chat if I change my entries. Okay, now let's have a look at the daily chart for BTC. So here is our daily chart. Unfortunately, it is not looking great. We don't have too much to hope for unless it does a spike up and it reverses back above the 20 and the 55 EMA on the daily. So as it's looking right now, we are below the support of the 55. We are below the support of the 20 EMA. We had a little bit of hope here. I remember Tuesday, Wednesday, Thursday looked great as well at the start and then didn't finish so good. However, I have been caught in moments like this, and I'm again, maybe caught is not the right word. I've learned my lesson in moments of this, like this. It hasn't broken the previous low and it hasn't gone anywhere. So ever since all this lovely support of the 20 and the 55 has been lost, we moved down 4% on the daily chart. That is not at all indicative of a push down bear trend, not at all. Now the stock on the daily is down, which would point to more downwards, but the MACD is showing a little bit of a breather with decreasing differences in sales. We need to see, because at the moment there's still a lot of sales here, as you can see in the chart, in the bars, how strong those bars are. Now, if we change to the weekly chart, we're going to see a slightly different image in terms of support and resistance. So they're always a little bit wonkier when I change. So on the weekly, we do have the MACD that is starting to come down, but the stock is still up. It's turned down because again we've had 1, 2, 3, 4, 5 weeks of a drop. But even if we've had all these 5 weeks of a drop, the movement was minimal, less than 8% on the weekly time frame. Again, it's nothing. It does look like an M formation on the weekly. It does look like an M formation on the daily as well. I don't, for this to me is not indicative, not good at all as far as the trend is concerned. It's looking like it's going to push down. So the weekly looks like it's between the daily and the weekly. The weekly seems it is the more motivated trend to continue down, the more motivated time frame to continue down. What are the reasons to believe that we might continue to the upside and do another higher high? Again, because we need to look at what's happening. The 50 MA on the daily was holding for quite a while, and we still haven't broken the previous low. This, to me, on the daily time frame is the one of the few technical reasons to believe that we're gonna reverse to the upside. So if I'm to give you 3 reasons to believe that this might reverse to the upside, is we haven't broken the previous low. 2, we're keeping close to the main support. We haven't left the area. And 3rd, despite the push down and despite the loss of support, we've moved minimally less than 8% on the weekly time frame. So these to me would be signs of a weakness of the pull down. There is liquidity buying up what is being sold, and that is strength. Now, however, support is lost. The next level of support is the 200 MA on the daily time frame, and we seem to be heading that way. So for the weekend, I'm going to be mapping, actually I'm going to leave this out, I'm going to be mapping the weekend levels on the daily time frame. There's no point going in a 3% range on the hourly. And I'm going to put the 200 as okay. So my main level of resistance would be the 30K, 29,900. I'm gonna put it here because it is a psychological level for BTC, and then I'm gonna clone this and put it down here. 200 MA on the daily at 28.3, 28.4. So these would be the weekend levels that I'm looking at. Again, the week looks exhausted. It needs to carry on the lift, because as is right now, the week is the one indicating that it's lost the strength. Last week it was a little bit different. The week was indicating more of a resistance, as in resistance to the drop. But right now, with the daily below the 50 MA and 55 EMA, and the weekly stock and MACD losing strength, we could be looking at a bigger drop. And of course, as we do so, we will be going through the levels that we have already mapped out. 25K would be the next one if the 28 breaks. So that would be our next level. Again, daily updates, and I'll keep you posted as far as they are concerned. Now, I'm gonna do the same thing for ETH. Here's ETH, same resistance. It took it a little bit longer to get above the 55 EMA, but it didn't actually hold it for any day. It is still holding the momentum a little bit better because the daily has crossed up and hasn't crossed down yet. It is above daily resistance level, so it's slightly stronger than BTC, but not by a mile. So we are still looking at the same problem with the with with the with the momentum. It doesn't look it's looking fragile. We have decreasing volumes here, and the MACD is decreasing on a longer time frame, but on a shorter time frame, we're not seeing the decrease in sales yet. If we change to the weekly, just to see where we are, I'm really sorry about the construction noises. It's I hope they're not too disruptive. The weekly is still up. We have a slightly positive reading here on the MACD because the levels are decreasing when the sales are concerned. But we have the MACD pushing down, so it crossed down and is still down. It tried to rehabilitate itself a couple of times in this sideways, but it didn't manage to do so. We still have our big cross signals. They're still valid. They are valid as long as price action keeps above the 20 and the 55 EMA in the trend. Now let's have a look at the daily MAs and map out the weekend levels. A couple of days ago, I was looking at a long. I still believe that it is possible, and I have my long entry in where I showed it to you on the chat. Again, my reasons for going long would be for ETH. We're holding the 50 MA on the daily. We haven't gone anywhere since we lost the support of the 20 on the daily. Like we've moved, again, we have moved, but we haven't gone. We've moved 2.3% since the previous low that broke it. So lowest low when breaking the 20 MA, and then the next low. So it's very, very little. It's minimal. So and the daily stock has crossed up. So could we just be signaling could this be a signal of the peak of the rally? Absolutely. Could this rally be over? Absolutely as well. It has reached retracement levels of, I believe, for ETH 0.5. Let me just double check. I remember I checked it with you in a previous session. There it is. Okay. Close to 0.5, but not really there. If this were a 1, 2, 3, 4, and then 5. The 0.5 would be 22.3, which is again one of our biggest levels that we've been looking at for it to go to the upside, if that is to continue. So again, if the 50 is lost, the 200 would be our next port of call for support. And in my opinion, if we do manage to close above the 20 MA on the daily, especially after keeping so close to it, we are likely to see a higher high on the daily. I don't know how far that high is going to go, but I will probably be looking at 22.3, even 2400, depending on how it starts forming structure on the 4 hour. So that would be the 4 hour I would calculate it by, I'll show you quickly. I would calculate it by taking this as the consolidation. I would be measuring again very conservatively just the core of this, putting it here. This would be 2060. So this would be the technical target of this. Once it reaches there, this becomes a consolidation, a reverse head and shoulders on the daily. And I would be taking, again, I wanted to go right to the head of this, but I say, okay, let's go to the medium shoulder, not the highest one, not the lowest point, the one in the middle. And there it is, 23.8. So that would be the accumulation, and I would take it like that, step by step, rather than and secure profit, take 50% out of my capital, and then add the extra, add what I've taken out back into it when I'm done. Okay, so that would be the weekend levels between 1770 and the daily MA at 80.90, so $130. Again, it could be a range worth trading. ETH is in a stronger situation. I did put a I'll show you my entry here. It hasn't reached it yet. I will probably adjust it later on around the start of New York if I see it's not reached. It is a little bit above the M1, and I do believe that it has the possibility, the chance to go from the M3 to the M1. So that would be my entry for the long, and I have 70% in this. So that would be the entry for the long that I see here. The stock has turned up. Let's see for the moment how we're gonna behave in this session. There's no point hyper analyzing all of this. I just put my entry there as a 1-2 on the 4 hour. So and I'm being quite strict with this because I'm going for the 786 rather than the golden pocket. Usually I would go for the golden pocket with ETH, but now because it is a 1-2 on the 4 hour, even on the daily, I'm going with a bigger range, which would be a more solid trade should it go in. So that is it. That's it from me. I'll be posting this video later on. Do let me know if you have any questions. Keep safe this weekend and have fun. I'll see you guys on Monday.